Good morning, everybody. I hope you had a great evening last night. It was still a little bit on the cold side, but one forecast today even has us hitting the 80s, but most of them are 75, so that'll be welcome. Hopefully we don't have 30 miles an hour winds to go with this temperature change, but it'd be nice to go out and take a walk without a jacket on. Henry will complain, I'm sure. Hey, today is the 10-year auction. There is very little news out around the globe to drive the trading. Japan's equity market was down. Everybody else's are up, so equities are pointed higher. Some of the arguments for equities pointing up are pretty lame in my opinion, but that doesn't really matter. I mean, all it takes for the E-mini to trade higher or lower for that a factor upticks and downticks. High-frequency trading has changed the game, and like it or hate it, it doesn't really make any difference. We see what these guys are doing, and we join them, and I think that's about all. You can't fight the tape. So we're in a situation today where you have wholesale trade. Nobody will pay any attention to that. Crude inventories outside of crude won't pay any attention, not energy traders. And then FOMC minutes that come late today, and it'll be old news. But the minutes will be scrutinized to see if they can get any more insight as to the direction of Fed policy, if and when they may cut more funds that they use to support the market. So the 10-year auction requires prices to go back and forth, but generally with an up bias so they can move the paper. There is no incentive for a buyer to buy the Treasury issues when the market is going straight down. I mean, if you wait a couple of minutes, you'll be able to buy it cheaper. So for the dealers to manipulate the market, you got to get some back and forth. You can see right now that volume, generally speaking, is moving higher in the distributions. We've got really pretty good support in this 23 to 20 area. So we'll make our first buy 25 to 21. Our second buy 13 to 17. I think we might go a little lower. Set up the 10-year auction. Then you got the top of value at 30, you got the buck at 24, you've got 03 up here. So really, last rotate up stopped at 30, so this 30 to 02 area, sell one, and then really we're back to our sell failure to take out 24 to 28. So that's the way that I see it. I think the 10-year auction will add support to the market, and we'll pick it up from there. Now, if the market is not as weak as I think it is, there's pretty good support. And the 24 to 26 area, it might take 27s to get in, but I think we got a shot at buying it a little cheaper, given the fact that the overnight structure's a B. And the market has rejected prices above 124. Taking a look at the 30-year, the knob spread came in a couple of 30 seconds last night. Really hasn't broken, so there's going to be probably pretty good support in the 916 area, as there will be pretty good resistance in the 924 area. So we're kind of stuck in a range right now. Don't have a lot of people abandoning length on a wholesale basis because of the political and economic, the political instability that we see around the globe right now, and then the perceived economic instability coming based on current G20 policies. Looking at this contract, the 16 to 20 area will be sell 1, 24, 28 will be sell 2. On the buy side, I think we can go a little lower, so we'll shoot for 5s to 9s, buy 1. And then 1s are better for buy 2. If we can't crack this 10 to 12 area, then we're going to have to pay up. While it's easier to call the note and the bond because they do trade fundamentals, we're tied to which way is the E-mini going to go, and that's a pretty tough call this morning. Everybody says it's going higher, and I can understand that. When you look at what they're basing that on, the start of earnings season, and Alcoa's earnings were better than forecast. Alcoa's like the major banks out there, only they can't pull from bad loan reserves to prop up their earnings. So they do all sorts of one-offs to arrive at an earnings per share number that beats the street estimate. That is the name of the game. And next quarter's earnings are the name of the game for the Fortune 1000, 500 for sure, and they play it that way, no matter what it does to their long-term ability to generate revenues and earnings. What it does, if you think about it over the long haul, it really makes for very, very interesting restructuring possibilities by taking these large public corporations private, getting out of the beat the quarterly estimates mindset, going in, doing some long-term strategic planning and thinking, rebuilding a particular company, then taking it public again. So it opens up a lot of opportunity for people that can repackage and restructure companies. And there's plenty of people that do that very, very well out of New York and the other major money centers around the globe. Okay, gold spilled right now. I don't think peace is breaking out anywhere, but we're going to go back and we're going to retest this 1300 area, which was perceived as a very, very important number. Our number 2 buy zone last night was 13 even, 1302. We had hoped to sell oh, I don't even have that sheet in front of me. There it is. We had hoped to sell the 15 to 17 area, and the overnight session high was 14. So we thought resistance was pretty good at 15, and it turned out to be that way. There's still that high volume area up at 17. We haven't made it yet. If 1300 holds up today and the market takes off from there, then given a little help from the Ukraine or other places like that, we probably have a pretty good shot of getting back up there. Markets don't go straight up. They don't go straight down. Although it's easier for them to go straight down than it is to go straight up. So we're going to sell 8 to 10s where the spill is. We're going to sell against resistance right there, then 13s to 15s. We're going to buy against 1300. It is a very, very round number, then 95 to 97. Most markets kind of held their own last night. Nobody's really tipping their hands. Pretty tough to make a call this morning. If it was based on fundamentals purely, it would be pretty easy to do. The central banks around the globe have gotten the trading so screwed up that you just really have to wait and see what the big boys are going to go do and then join them, and you have to trade out of these high volume areas. If you want to fade the market, you got to do it in a high volume area. And you can see that we got volume, these little volume areas right here. Right here, so selling above basically 138 supply. That's what we wanted to do last night. We had to sell at 10 to 20, and then 40 to 15. We had to buy at 75 to 85, and we've just touched both of them. Came in a little bit low, our 10 to 20 sell. We got a B pattern right here, although there's a lot of volume above 37.90. So my guess is we're going to head lower. The breakout came from 37.50. The last rotate down was 60, so this 60 to 75 area, buy one. And then 40 to 50 will be buy two. On the sell side, we'll make it 38, 38.10. And then I don't think we got enough to take it higher, so if we get through 25, next real resistance area on the charts will be against 50, so we'll make sell 2, 40 to 50. Going to give it some room. Okay, one of the articles out of Ukraine, and it's been I think we've had this article every day, was Russia's getting ready to invade their Ukraine. And we can see that gold didn't really buy into that. So the other check on that is how bad or how tenuous are things in the Ukraine or around the world, the rumors of war, is crude. And crude reacts faster to that than any market around the globe. And crude is up. So 102 is support. And we've got 103. Then we got this low volume area, 350 to 375 would be the next area up there. So 103 even. Got this low volume starting at 102.98 to 313. So 103 to 3 1/4. Sell one, and 50 to 75 will be sell two. And that's on the assumption we can get through 103, get stops above that, and they're poised to do it. On the buy side, I don't see that there's war or anything's any different in the Ukraine, but so the aggressive buy, I'm going to make it 25 to 102, a retest of support. It may take 50s to get in. The market comes down. But we don't really worry about that too much the way that we trade. Then our 50 to 75 is where the breakout came from. We just take our setups and trade away and see what the market brings. This contract is explosive, as gold is. It can really move quickly. And you can't forget that. Okay, the E-mini. This is where the world's focus is right now, and what the E-mini is going to do is going to set the direction for, I would guess, every other market. Some of the stuff you read on the stock market, I mean, from a logical economic fundamental standpoint, is really, really tough to swallow. So Hobart today, who has an index that really measures sentiment, for the most part, is talking about that his index or his sentiment indicator is almost negative enough to give the market that wall of worry to climb, which will make for a much stronger stock market rally than the previous one that took us to new highs. So go figure. People are scared enough to buy stocks, therefore stocks are scared to buy stocks, therefore stocks are going to go higher. Now, given high-frequency trading and the ability of high-frequency traders to create perceived demand for stocks, that can make some sense. It doesn't take any more than stocks trading on an uptick. And the domes showing more buying interest and selling interest. And the high-frequency traders can do that too. So we've got some pretty good resistance right here at 50. And we've got the very, very clean break in this 56 area. And then we had the selling that started at 63. So 50 is a round number. Getting stops above that, I think, is doable. So the first sell, 49 to 51, that's where resistance is. And the market has been trading lower. There's no more logic involved in it than that. You can see that the last rotate down yesterday stopped at 41, so this 40 to 42 area I think offers us some buying opportunity. And then our 35, 37. Not enough news or anything right now to really trigger selling or buying because of news. So a lot of it's just going to be perhaps a relief rally. Now remember, when we looked at our bar charts, we've got 3 days lower right now, and if we can get another day lower today, that really opens us up to that 12 to 17 day sell-off before the market consolidates. If we come sideways today and we don't materially take out yesterday's high right here, basically 50 holds, then the market will have tested resistance, it's held, and it's ready to go and test support and or take it out. So that's kind of where we are today. So I see a trading range market with a down bias, longer term, and we're going to see what happens at 50. Cleanest break in the market's at 56, so structurally, selling a 54, 56 makes some sense, and then 63 is where the second leg of the selling started. Now, this market, if it's really, really strong, we're not going to be able to take out that 44, 45 area. And if that holds, then it gives us a shot at our 56 area. Why 56? That's 10 points off whatever the day session low is. And that's a possibility too. So don't have a super strong opinion this morning, but we'll just kind of feel our way through the market and flesh it out as it goes. So biggest dynamic driving the financials today after the direction of the E-mini settles in is going to be the 10-year auction. And historically, the financials have sold on the second leg of an auction. This year, the more common pattern for the dealers is to take it up every day. So we'll see if that's in play too. Okay, it's going to take probably about 10 minutes to get everything done. Okay, on the note, we had 30 to 02 was sell 1, basically 4 to 8 area would be sell 2. Pretty good resistance at 30, then at 01, then 03 to 05 is the next little break up there, Don. And so the sell 2 would be basically selling against, failure to take out 24, 04, 08, okay? Let me go stop the recording.